Okay, welcome everyone. I'm excited to see all of you here today. We've got you on mute, but don't worry, I will unmute or allow you to unmute yourself about halfway through so that you can ask questions of our two amazing guests here today. Cool, so hey everyone. Oh yes, we are recording. Amazing. Hello everyone, my name is Cheryl. I am the CEO and founder of Aussie Angels, and we are a platform that supports people and investors to run their own angel syndicates. So most of you are here today to hear from two of our syndicate leads who are starting a new syndicate, which is lovely on brand today in their background photos, VentureX Capital. So actually kind of funny story. I met Tracie. Someone from WA reached out. They were running the West Tech Fest and they reached out and they're like, hey, do you want to come do this like investor weekend in WA and Margaret River? And I was like, I hear they have good wine there. Not really sure what to expect, but yep, sounds good. And then she's like, we don't really have like a set way for you to get from the Perth airport down to Margaret River, but we're just going to pair you up with somebody and you're going to get in their car and like go for a 3-hour drive with them. And I was like, okay, cool. This sounds good. I was like, this could go really badly if we have nothing to talk about. Or it could be cool. Thankfully, I was paired with Tracie and we had the most amazing chat for those 3 hours. And I'm really, really glad that it was you, Tracie. And I learned so much and I was so impressed with your background as well. So I'm really excited that you and Cheryl, the other Cheryl, no relation, she spells it the cool way. So we've got Tracie and Cheryl here today. And I'm going to ask them a couple of questions, but we'll also leave some time for all of you to ask questions as well. And when we do, you can either put your hand up or raise your hand via Zoom and I'll call on you, or feel free to just come off mute. So let's get started. I would love to hear, maybe starting with Cheryl, tell us a bit about your background and where you started in the business world.
Oh, I have quite a diverse background, and as you can hear from the accent, I was not born in Australia. I came here mid-career in 2000, was born in South Africa. I started my first startup at the tender age of 20, was very excited working in this buzzing environment, and then had a baby, and I had an ex-husband who wasn't really keen on my working 24/7 and taking the baby with me all the time, and made me give up the startup, resign from it, and join a corporate. My ex-partner in that startup today lives in Point Piper, and that business was a huge success. And I was always devastated that I wasn't part of that journey at the right time. So after working in the corporate environment for some 18 years, I decided it was time to jump ship again and to start another entrepreneurial journey. I founded 2 companies in South Africa, both of which were in the medtech space, IT and medtech, and sold to Dimension Data and to another hospital group. They were both amazing companies, and I learned so much on that ride. And then came to Australia to take up a position in a corporate environment yet again, working with a health-based IT company. It was in the .com era when everybody was talking about technology. Unfortunately, ours was not a success story, which just proved that it's all about timing, not necessarily about the technology. People were not ready to let health data go off-site, away from the doctor's environment. So we were a little ahead of our time. And I also realized then that I didn't like that kind of environment, that I needed to be doing something myself. So I left there and have been involved in startups ever since. Did another startup in radiology in Australia, which we sold to Telstra. And then there was one that I was involved in that was not successful, but it was probably the best learning experience of my life. The technology was very successful, but we failed to commercialize in Australia, but that's a story for another time. And after that, I've spent some 14 years with Accelerating Commercialization, the federal government grant program, doing due diligence on their behalf and looking into some of the most amazing companies, learning new technologies every day, and just seeing how hard it was to get investment out there and what the lay of the land was. Felt then that it was time to get my hands dirty, and now I've taken on a CEO role with another startup, this time in biotech.
Wow,
my
so many
story.
startups. I love it. And so much experience along the way. And it's really refreshing to hear, oh, well, it wasn't actually a success story, because we hear so many of those like, yeah, it just went gangbusters and no big deal. Tracie, tell us a bit about yourself.
Yeah, so I very different background. So I started out in accounting and moved over to investment banking, then set up my own financial planning business and investment management. I sold that financial advisory business about 6 years ago, and then refocused on board roles and investing in startups in a more meaningful way. Over that time, I was the vice chair of Perth Angels for 6 years, and also an active member of Scale Investors in Melbourne. I started investing first in property and equities when I was about 18. So I started really early, and it was very strange in my family because, no one had invested in shares and that sort of stuff before. But yeah, I've always been very active investor. In fact, my sort of professional career, if you like, was more of a sideshow to all of that. And then, now I really get to do that sort of full time. And I've been, so a very active investor for over 30 years, and in the early stage for about 25 years. So yeah, before it was startups were really a thing.
That's what I think really surprised me or impressed me most. That you said you'd written your first angel check like 20 years ago. And I think, what was it? It was like a med tech or health tech company?
Yeah, it was, yes, it was Capital Health. So that was it was meant to be a roll-up of dental practices, but it went through quite an interesting journey, ended up being a roll-up of radiology companies, which is still listed today, and it has done very well. So yeah. But I also, back then, I had just sold an investment property and had money in the bank, and decided, for whatever reason, because I was still lacking experience, to put too much of that money into one venture. So I'm very much across diversification and risk management these days.
And what I love about the two of you is that you do bring such unique perspectives and experience. Tracie, yourself on the financial side, and Sheryl, just such a huge background of consulting and starting startup side. So the two of you together, just such powerhouse. All right, well, let's talk a bit more about what is it? Why are you starting a syndicate?
Yeah, so really, I mean, it's an extension of what we already do, I guess. I've got over, almost 30 investments now in early stage companies. And I just like the idea of investing with others and bringing people along for the journey. And I think it's also that, the next step for us, investing together and doing that. But also we as VentureX, spent quite a lot of time working with founders last year, and we'd written a report, and a lot of reports came out about the low level of funding into female ventures. And we also felt like it's okay to be running these programs and, helping, mentoring women and doing all that, but really they need checks and they need, funding into their ventures. And so I think, this was our way of being able to contribute and make an impact into, improving the level of funding. So get straight to it rather than,
Just adding to what Tracie said, I feel that I've had a very interesting and successful career in the main part, and I wanted to give back to the ecosystem and help others along the journey. When I started my business, there was no such thing as getting investment money into your business. If you couldn't bootstrap it, you were dead. And I know how hard that journey was. Conversely, now that I'm raising capital for the company that I'm involved with, I realize just how much you weigh every dollar of investment money, more so than your own money, before you spend it. But overall, there are only two things that startup companies really need. The one is capital. They need money, cash, and they also need contacts. And if we can in some way facilitate that and help them open doors to make that journey smoother, it's something I'm quite passionate about.
And I guess, speaking of how you help, obviously with each of your backgrounds, maybe share a little bit about how are you helpful as angels when you write checks?
Yeah, it's certainly just an extension of what Cheryl was saying. We do have pretty extensive networks across Australia as well, and we do mentor a lot of companies, and so I think it's those networks and really helping to guide the startups through the variety of challenges that they face when most of the time they're not unique challenges. They feel unique to the founders, but we've usually seen them before, and we usually have people in our networks who can help them out as well. So I think that's how we're helpful. And obviously, money. I mean, the most helpful way that angels can contribute to a founder is by giving them money, but you're also guiding them on how to use that. So yeah.
Yeah, I think very much what Tracie said. I think founders don't realize how invaluable connections can be. If you just call somebody and you're an unknown entity with an unknown technology, it's really hard to get in the door. If you can have somebody that you can use to brokerage and introduction, makes a tremendous difference. It does help. I personally tend to pick investments that I like and that I understand, where I feel I might be able to help the founder in some way. Not that that means you want a seat on the board. That's certainly not the case. But if they can pick up the phone to me and know that I can help them in some way, I feel that I'm doing more than just putting money into a business.
And speaking of boards, you've both sat on and currently sit on a number of boards. How does that play into, like, I guess, your experience and the value you can bring to startups and, like, I guess your board positions? And Tracie in particular, yours are so diverse.
Yeah, I'm across quite a few things, and I guess it also helps with that governance role as well. Helping a startup to think about some of those the governance issues that they need to put in place, particularly, to attract investment in the future, and also to run a business effectively and run it the right way. So, but it also gives me an insight into a number of different industries as well. And again, it just helps, I guess, with those connections. And there's been some med tech businesses that I've been able to introduce, let's say, to the Cancer Council, because they're appropriate and things like that. So it certainly helps.
And Cheryl, you number of boards that you've sat on and been a part of, you've been a part of a number of, like, female focused ones, including like Women in IT and SBE. Like, what is that for you? Why?
It's just, for me, it's just a way of giving back and helping other females on their journey. There was no help when I was there. For 18 years that I worked for corporate, I worked for IBM and I worked in the mining department. I was the only female there. It was quite a lonely space. And blokes go to the pub after work and they have a beer and they share everything very easily. I don't think women are able to share with colleagues to that extent. So providing a safe environment for them to meet other women, talk, share their journey, get some advice along the way was really important. It's something I missed tremendously in my early days. The boards that I've been involved in have very much been boards that have helped startups, because that's where my area of interest is, and also on medical boards because of my background.
Which is funny that Tracie's first investment was also in a medical company.
Yeah.
Cool. So let's talk a bit more about the syndicate. Tell us about your investment thesis.
Yeah, so we've kind of got the standard sort of time horizon. So in this sector, you've got to be patient. It's usually 5 to 10 years, before we look at exiting an opportunity. But having said that, we do definitely have a focus on trying to bring that forward. We can never promise that, but it is always in the back of our mind as, can we provide earlier exits? In terms of risk exposure, we are seed. It is risky, but we do, look to mitigate that as much as possible. We make sure there's market traction. We do quite a bit to ensure that, the market and the customer is validated. We like some sales. That's always probably one of the better ways to validate customer interest, is to have sales. The accountant in me really likes to see that there's it's going to be a profitable company. You know, you can keep throwing money into a company and it can grow, but at some stage you want to know that if that growth sort of turns off, that you can turn that into a profitable company. We're fairly sector agnostic, but we do leverage our domain expertise, particularly in fintech, medtech, marketplaces, and circular economy. You won't really see crypto and gaming, I think, from us. None of us really have an interest or too much expertise in that area. We look at opportunities across Australia, but we're likely to have a bit of a Perth bias, of course, but that's not such a bad thing. Yeah, we have a very comprehensive DD process that we've developed and worked through. Also, that helps take a bit of the emotion out of it. You can absolutely love a founder and want to support them, but you know, going through a process and making sure that yeah, it really does stack up. So that's yeah, our main thesis. Sheryl, did you want to add anything to that?
I think for me, this is a new way of investing as part of a syndicate. All the investments I've made prior to this have been personal investments because I've liked the company, done my own due diligence, made my own decision and gone ahead with an investment or not. I think for me, this is a different way of looking at things and sharing the risk. I have invested in early stage companies where the risk is quite high. And I tend to invest in companies where I feel the founder has the tenacity and the drive to make a difference, as much as the technology being something of interest to me. Founders and the founding team are critical. The other reason for my interest in this and wanting the syndicate to succeed so much is because there's very little early stage funding in Perth, let alone for females, for entrepreneurs in general. The only really government-supported funding that we have here has been the Innovation Booster Grant, which until now was $20,000. This year they upped it to $40,000, which is still not enough to register your IP or to get a minimum viable product together. We're very, very lacking compared to other states. It's interesting because when I started my journey with Commercialisation Australia, we used to compare ourselves with Queensland and see how they were tracking. And all those years ago, Queensland seemed to get the same value of grant funding out of the government as we did in WA. The difference was they got more small grants and we got more bigger grants. They've left us in the shade because they have put in such a strong early stage program for seed funding. And unfortunately, WA hasn't been keeping up with the times. So lots of good ideas have been parked because of lack of funding to get them to move forward.
That's really interesting because I agree, you know, spending a bit of time there last year, I did think that there was a lot of potential and alpha opportunity for investing in Perth. So I'm really excited to see what you guys are going to put forward. But that's really interesting to hear that you were on par with Queensland, but it's slipped away and what that means for the ecosystem. And I mean, I guess as investors, that presents an opportunity, but it is also a shame for the ecosystem that the government isn't pulling their weight anymore. Maybe tell us a bit more about the DD process. Or sorry, Tracie, you're going to add something there.
Oh, no, that's all good.
Trace,
you mentioned this really.
Do you want to describe the DD process, Trace?
Yeah, sure. So look, we do, you know, we have essentially get all the information. You know, we look at through their accounting. We look through, you know, we've got a checklist really that we work through in terms of who are the team, what are their backgrounds, you know, resumes, reference checks, those sorts of things. We look into the marketplace. We have people that we can reach out to in terms of an investment committee that we can reach out to in who have other domain experience to add to ours. So we, you know, it's not just us who are working through that. And so we have a bit of a team. Yeah, we, you know, it's we do quite a bit to look through the market. We look at the teams mostly. Yeah, the main areas. Yeah.
Awesome.
And also
and I might just
competitors, I should say, we do quite a bit of competitor analysis as well.
I might just throw in a question here from Ingrid. You mentioned that you want to see sales and potential investments potential investments you're looking at, but med techs and health techs often are pre-revenue at the seed level. So maybe just expand a bit on that. How do you take a look at them?
Yeah, sure. So medtech can be a bit of a different beast for sure. And it's more about the problem that they're solving. I think it's, quite often the difference there is that they're solving big problems, that there's often not solutions to at the moment. IP, if they've got some competitive advantage and some IP that they've got there. And like I said, it's really about, that the size of the problem that they're tackling, how they're going about it, how are they going to get that into market? Because that, I think, for me, when I've invested in med tech companies, that's, the actual technology has only been part of the piece. It's then how do you get that out into market, and that's often quite challenging. So you want to make sure that they've got the right team to be able to get that, get that out there into market.
Maybe I can add to that a little bit, Trace. I think with regard to the technology, it's not just med tech. We look at the technology and say, what are the barriers in getting this into market? Are we going to hit regulatory hurdles that are going to cause stumbling blocks and not be able to proceed? And where is the tech and the company in relation to those hurdles that they have to go through? Do they have a clear pathway? Can we help them through? What can be done? And also medtech and biotech tend to take a huge amount of investment compared to other technology companies. Software require much less funding. So are they at the early stages? Is the funding that we're going to provide going to be enough to make a significant difference, or they're going to have to look much further afield to get the money to get going? You don't want to invest in a company where it's like throwing money into a swimming pool and they can't make it to the other side. We've got to make a significant difference with that investment. And as far as if I can just come back to that DD point that we were talking about a little bit earlier, to me, the DD process is a bit like a dating process. You have to kiss a lot of frogs before you find your handsome prince. I like to have a relationship and a discussion, a couple of discussions with the company and the founder. If they talk to you when things are good, that's one thing, but you want to know that they're going to be prepared to come and talk to you when things are tough, and that you're going to be able to have some pretty hard discussions along the way, and if necessary, help them through a pivot or whatever might happen on the journey. It's not all smooth sailing. So building that relationship and understanding who you're dealing with is very critical, in my opinion.
And that's where we can add the most value too, is usually during those times when there are problems, and helping to, help work them through. So, yeah, it is important, absolutely, that they come to us in good times and bad. In fact, when I get worried when founders go a bit silent and we don't hear from them for a while, because you know that usually they're maybe hit a bit of a rough patch or something.
Yeah. I mean, there's not a single startup in history who had all smooth sailing. So it's all about how the founders handle that. So maybe what do you look for in founders when you're taking a look at a business and identifying the characteristics of founders that you think are going to be able to weather those bad times?
Yeah, sorry, go Sheryl.
Well, absolute passion and tenacity are the two key attributes that I think they have to have. The going does get rough. There are down days, plenty of down days. You need to know that they have the strength to get through that, and they have the support around them that they're going to need. Being a sole founder is a very lonely place. I don't personally like to invest in sole founder organizations. So if we can help them establish a board of advisors or whatever else they need around that to make that more attractive to be investable, we like to do that.
Yeah, I'm very much on board with that too. Just resilience, I think, is the main thing, and the ability to execute on their growth strategy. Do they have the skills to be able to do that? Are they coachable? Can they take on advice? Do they know who's lacking in their team, and willing to bring people on to help build that out? And as Sheryl said, a real passion for what they're doing, because they're going to need it if they're going to get through that whole journey. I had, a couple of companies that, COVID would have wiped I think most people out with the particular businesses that they had, but they, were so amazing in being, resilient and pulling back and going, okay, so we can't sell anything right now, so how do we, keep the business going, and how do we, improve our systems and look through our business and take this time to just sort of, add to the business, so that when COVID's over, they can, just take off. And that's what they did, and that shows that resilience of not just giving up when times get tough.
Yeah, absolutely. I think that is one of the toughest things, even for good founders. And I guess speaking of founders, you're investing primarily or exclusively in female founded or female led businesses. Is that just because women are awesome and you want to give back, or is there a deeper strategic angle to that?
There's a deeper strategic angle to that. If you look at the very small amount of money that's going into female-led businesses, there's a huge gap. And if you look at how successful female-led businesses are on the whole, they're infinitely more successful than male-dominated businesses. So that's what's guided our mission, and VentureX is very much committed to helping female entrepreneurs. We like to see a female in a position of power, either as a founder or CEO, C-suite, and we like to know that they've got a good equity stake in the business.
Absolutely. So for me, as an equities investor, I was always interested in investing in that small cap market where there was sort of less research and, unloved investments. So, that's where I found good value. And I think it's really very similar when investing in, female founders. There's not a lot of money going to them, and there are, the markets that they tend to build businesses in are not as well understood. They're often underserviced, and founders might be overlooked. So I just see that as sort of looking into a market where there might be better growth opportunities that others might not see. But also, as Sheryl was saying, some BCG research was saying that they found female-led businesses generated 10% higher revenues annually, and per dollar of investment generated 78 cents, while male-founded startups generated only 31. So it's an actual genuine investment opportunity, I see.
Yeah, absolutely. I'm with you on that. Yeah, the numbers don't lie.
No.
But considering you're in a market that absolutely has a lot of opportunity, but we know that this is a deal flow, a pipeline issue when it comes to women-led businesses in the market. How do you intend on finding great deals that fit this criteria?
They tend to find us. So
exactly the same
okay
thing.
then.
I think between Tracie, Steph, and myself, we have quite a high profile, and women need money desperately. They're finding us quite quickly.
Absolutely. No, there's no shortage of deal flow, and even across Australia. Not just limited to Perth, but we with our networks, we do have. And also when it gets out there that you are looking for founders to invest in, the word spreads pretty quickly. So yeah.
Okay, so no deal flow issues. Got it.
No deal flow issues. Good. And also we've been watching a lot of we've been mentoring and watching a lot of these founders for years, particularly in like the medtech space and things too, through, early accelerator programs. I'm looking at one to potentially invest in at the moment that, I saw 5 years ago in a CSIRO accelerator program. So, we've been able to watch that journey. And that's also part of that DD process too, you get to actually see how they work as a team over that time, and see how those ideas move forward. So good.
And how they meet their goals as well. They tell you they're going to do something.
Yeah.
6 months later, you check in. You're like, oh yeah, cool, you did that. Like,
yeah, exactly.
I've made very few investments where it's just immediately meet them and then make the investment. It's just you get to know someone, you start to like the founder a lot better. So I'm with you on that. And in terms of how much you expect to be investing per company, what do you think that check size will be that you'll be investing per company? And then also, what is the minimum check size that you'll expect from investors who come in on a deal?
Sure. I think since it's very early, we'll probably set the expectation of between 100 and 200. I'm hoping 200 per deal. I think the minimum check size we've set at 5K. Obviously, it's a lot easier to fill around if you do your standard angel check of 25. It's a lot more convenient. But I'm very focused on making sure that investors also have diversified portfolios and invest a little bit in a lot of different companies. So I think we've deliberately set a lower benchmark there, or a lower entry point to help facilitate that. So 5K will be our minimum check size.
Amazing. I think that that's really helpful for women who want to get involved in investing as well, because when you're just getting started and you want to learn, those first learning checks, being able to write smaller ones can be really helpful, not just to learn, but also to create that diversification, like you said.
I think that's why the syndicate investment is so appealing. People who are not used to investing or who haven't invested in this type of company before can put in lots of small checks. They can invest with a group where there's security of somebody else leading the due diligence, making sure it all hangs together for them, and getting exposed to different things before they make a big investment. I always say we have a lot of engineers, petroleum engineers, and all kinds of people earning big salaries in WA. And if they were to put $1,000 a month away as an investment, by the end of the year, they've got 12 grand to invest in something. So they could make a significant difference as being part of a syndicate like this.
Yeah. We don't take $1,000 checks, but yeah,
but
you could make two investments with that.
Yeah.
We also had another question from Trina. Just checking if you only consider tech or if you also look at service-based businesses.
Service-based businesses are difficult to invest in. The growth potential is very limited by the type of service they're providing, and it's always very labor intense. So preference is always for a tech investment above a service industry, but we'd look at it. If there was a compelling case, we might look at it and see. Trace?
No, nothing to add to that. I 100% agree.
So maybe you can expand a bit more on what types of companies or deals we might see from the syndicate this year.
Yeah, so I think, because we're fairly sector agnostic, I think we should have a fairly broad range to bring to you. I think, I don't know if we'll get 4 through by the end of the year, but we're looking more at quality rather than quantity. So the first one we've got that we're looking at is a little bit different. It's a retail product in the tanning market, actually, which is a different one, but she's certainly got a lot of market traction and high sales, and I've been watching her journey for quite a while. So that'll be the first one that we bring to everybody. But yeah, we've got there are a few medical technology ones that we're looking at the moment. There's fintech. So yeah, there's a broad range, but yeah, at the moment we haven't quite done enough due diligence to say whether we're going to bring them forward into the pipeline or not. But you know what the pipeline's like. You've got 20 that get dwindled down to 2 or 3 that we really consider. So yeah, we're just sort of sifting through that at the moment. But like we've said, it's I think the medtech, fintech marketplaces, circular economy, those sorts of areas.
Yeah, awesome. And maybe just quickly, for our audience's benefit, you could quickly explain, like, how does the syndicate work?
Yeah, so I think from a founder point of view, there is a portal on the VentureX website. So you can make an application for funding through that. And then as a investor, go to the Aussie Angels website, find us on there and do your application. I think there's the standard fees that apply. We have applied a 4% fee as well, but to help keep the lights on. And the fee structure is very much in line with other syndicates, like 1013 and others that are out there. And also, what else about that? Yeah, and there's never a commitment to invest. So sign up to the syndicate. You get to have a look at the deals that we're looking to participate in. And if you like it, you can join us.
I don't think we've answered Anita's question well enough. I think Anita's asking here, will we be connecting investors with the founders based on check size? Really, the investors choose the deals that they want to be involved in from the portal. They will have access to seeing the deals, and they'll say, I like this one, using one Tracie mentioned as an example, this beauty product in the tanning space. If somebody is interested in that, they can say, I'd like to invest in that, and that's my check size. And then all the money that we raise will go to that deal. You might say, I'm a little bit interested in that. I only want to put 5K into that, but this deal here on some biotechnology is really appealing. I'd like to put 5K into that one. So really, it's not dealing directly with the founders. It's dealing through the portal and investing in a syndicate.
Yeah, so Anita, does that answer your question? So we pool the money together, but it's on a deal by deal basis. So you get to choose which deals you go into. And again, just as Tracie said, there's no commitment to invest required when you join, and there's no minimum like amount that you have to commit to. So you're basically just putting your hand up to say, hey, Tracie, Sheryl, when you're investing in something, I'd like to know what you're investing in and have the opportunity to put my check in alongside yours, which is what I think is so cool about the syndicates, because it means that you can learn alongside them while also getting the freedom and flexibility to decide on a deal by deal basis. And how many deals might we expect from VentureX over maybe the next 12 months?
I don't think we want to commit to a number. I think we want to make sure that the deals we bring to the table are quality deals and deals which we believe are worth investing in. So yeah, as Tracie said, we'd like to do 4 deals at least a year. We may do 6, we may do more than that, we may do less than that. But we wouldn't put a deal on the table where we had reservations about it.
Yeah. We always
Cool.
put our own money into each deal, obviously, as well. We wouldn't expect anyone to invest in something we weren't prepared to put money into.
I think that's the litmus test for us.
Yeah.
Yeah. I think that's also what's really cool about syndicate investing is that, you're putting your money on the line. It's really, what are you investing? I want to put my check in alongside your check. It's not that you're saying, hey, this is a cool company, go invest in them. You're believing in them just as much as everyone else. So I've taken the setting off that forces you to stay on mute. So if you do have a question for the 2 amazing ladies here, please feel free to either raise your hand on Zoom and I can call on you, or just come off mute and ask your question. Or if you can't do either of those, you can pop it in the chat and I will say it out loud to them. But yeah, this is the time where we open it up for questions.
May I just say that investing as part of a syndicate is really great for new investors. And it's not that different from for the entrepreneur, it's not that different to taking investment from a VC. You get a pool of money and you've no idea who the people behind that money really are. If I look at the company I'm with now, they took lots of investment from individuals, fools, family and friends in the early days. And when I came on board, I had the share registry that was a nightmare and had to end up converting the company to a public unlimited company, just so we could take future investment. If they had taken investment through a portal like this and a syndicate, we wouldn't have landed up with that problem at the time that we did. So it does cost the company later on taking lots of small investments. This is infinitely better.
Great to hear that. We had a question in the chat. How do you keep investors updated with the deal's progress? I'm assuming maybe the company's progress.
Yeah, so I always insist and put in the paperwork when we're committing to a deal that we get quarterly updates from founders. It's interesting as well, and it helps with future rounds that if they're reporting to us quite regularly, in a couple of years when they come back and ask for more funds, you feel like you've been on the journey, you know what they're doing, you know what their strengths and weaknesses are and what they need the funds for. I find that you get companies that don't report, they come back to you. I've had one just recently, and it's like, I didn't even know you were still alive. So and now you're expanding into the US. So that's interesting. But I'm less inclined to put money, to top up my investment, when they don't communicate. And because you've kind of got to start your DD again, right? Like you've got to ask all those questions again. So so I like quarterly updates. And I'm assuming that we can facilitate that through the platform too, Sheryl. Yeah.
Yeah. So we do allow you to send updates yourself, but we also have the founders send the update into us, and then that gets distributed to investors on the platform as well.
Yeah. That's great. So that's what we aim to do. We can't always promise it, but that is what we aim to do.
Tracie made a very good point there, because one thing that's certain is you will always need more money, especially if you're starting off with what we call seed, $200,000 to $300,000 at the beginning. Every company is going to need more money as they succeed and grow and want to expand and do different things. If you don't keep your investors on the side, it's going to be infinitely more difficult for you to raise more money from them in future rounds. So very important that you keep them updated of good and bad developments within the company.
Oh, that's maybe one thing we didn't cover. What stages will you be investing at? Pre-seed, seed?
Yeah, so pre-seed, seed. We might do some follow-ons with Series A. We'll just see. It depends on the size of the investment that they need. But definitely in that very early space.
And we had a question from Anita. Are there any immediate financial benefits of investing via the syndicate, such as tax benefits through ESIC companies?
So my understanding is that any ESIC opportunities will flow through to the individual investor. So that, yes, so potentially, can't guarantee that every company we invest in will have those ESIC benefits available, but definitely if they're available, and we do ask that question as well, and would apply that if we went ahead with an investment and that passes through to investors.
Yeah, definitely ESIC flows through when the company is ESIC.
Yes.
And I'm not quite sure what you mean, Ajith, by is the syndicate process documented? Perhaps you might want to come off mute and expand a bit more, or maybe Tracie or Sheryl, you understand what the question means?
I don't. So we'd be able to go through the process. Really, you need to just jump on the link, and I think it's pretty much self-explanatory as you work through it. But if not, I'm sure we can help you if you have any problems as you go through it.
Yeah, I think with the DD, so what we do as part of that process is produce a deal memo, which goes on to the site, which you will get to see. And so I guess it's a case of that gets shared with you, and then you can decide if that company looks like one you want to invest with us on. I think in terms of the process for Aussie Angels, that's quite well documented on the website, I think. So I think follow the instructions. I managed to sign up fine, so managed to navigate it.
Yeah, I think that's the great part about it is that, jump on, sign up using the link that we've dropped in the chat. There's no, we're not asking you to pay up front, so you can jump on, go through the process. If you have questions, great. If you decide after seeing a couple of deal notes that it's just not for you, then cool. You've learned a little bit along the way. And Anita was wondering, what return are you looking at for investors after 5 to 10 years? Keeping in mind, I will add the disclaimer that this is not financial advice or investing advice in any way.
Yeah, that's always a tricky one, and exactly, there's no way I would ever promise returns. But having said that, is every investment we look at, there has to be at least a sort of a potential for a 10 times return and upwards. So, you've got to bear in mind that, and the other reason for diversification is that most of your returns are going to come from, if you've got 10, probably 2 to 3 will probably shoot the lights out and get you you know, that 10 to even 100 times. You know, you just don't know. Depends what company you back, but you know, you're going to have a few that are going to die along the way, and a few that are just going to probably just get your money back for you. So yeah, that's the other thing around diversification, making sure that you've got more than just one or two that you've got in your portfolio. And yeah, that's kind of the metrics. But every investment we look at has to have that potential for that type of growth.
And in terms of timeline, like what are you aiming for in terms of like if the company is successful, or are you looking for exits and monetary returns, as Trina asks, in terms of like a 5 to 10 year time span, or?
Yeah, so yes, it will be that time frame, because that's pretty standard. I think when you're investing in these companies, you always think that they're going to, you know, come off a lot quicker when you invest in them, but they don't. It always is such a long journey. And quite often, if they're going well, you want to stick with them, right? So that time frame isn't so much of a problem. We have been talking a lot though around you know, whether there's potentially opportunities for you know, investing in some companies with earlier exit opportunities, but you know, it is quite tricky yeah, to find those. But yeah, it's a focus of ours anyway.
I think they all yield different results and different timelines, and that's why we encourage you to invest across a portfolio of companies. If you're looking to put 20K or 25K in, whatever your amount is, rather to spread the risk a little bit. So you'll have some that you can exit early, some that might take longer. You might get a multiple of 10 on one, you might get higher and lower on the others. You know, there are no guarantees. It is a risk. It's exactly the same as buying shares on a stock exchange. You don't know what tomorrow is going to bring.
Yeah, absolutely.
Yeah, it's going to be very volatile. And if the syndicate doesn't reach the 100K, does the deal fall over, or might you just invest a smaller amount? And then on the flip side, is there a ceiling on the deal size?
That will probably be fairly founder-led. I think that'll be, each individual deal will probably determine those factors. I think you know, we will negotiate how much of the round, you know, we'd like to apply for and secure from the founder. So that, you know, usually around that sort of 100, 200, it depends how much they're raising. If they only need 100, then that's what we're going to go for. If they're looking at, you know, trying to raise $500,000, then we'll probably, you know, depending on, I think, how many investors we have and what we feel our capacity is. You know, we don't want to overpromise to founders that we can fill a $500,000 round and then not be able to come through with that. So we're going to get a feel for our investors and what they're likely to be able to invest as well. Yeah, and
I think we also see ourselves as a startup. So
yeah,
we're very much dabbling in this at the moment. We're not going to put in any hard and fast rules, and we'll see how it evolves over the next few months. We might land up with more interested investors and be able to fund bigger deals. We don't know.
I'd be surprised if we couldn't, you know, fill at least 100K quite quickly. So we shouldn't have too many deals that fall over.
It's probably also worth noting that the way the Aussie Angels platform works is that it's first come, first serve. So if you have secured 100K with the founder, and that's, you know, all that they'll take at this time for the round, and the first however many people to put in their investment amounts will get allocation. Once you hit whatever allocation amount max, then we cut it off. So we don't do scale backs or reduce or kick some people out and not others. It's just the first people to come in get allocated. So if you do want to invest in a deal, it's worth putting in your check as soon as possible to make sure. And then there's the next question. I might just cover this one. How do exits work? And do you need to wait for the whole group to sell off their stake? So we support the syndicate leads to manage that process. And if there is an exit, then we will actually manage the distribution process for you. If there's, for example, you know, they get sold off and there's a distribution, then we just distribute that to investors. If there's an opportunity to take money off the table, then we would go to Tracie and Sheryl and say, hey, there's an opportunity. Would you like to do so or not? And they might poll their group of investors and make a decision based on that. But we as a platform will take direction from Tracie and Sheryl in situations where there's a question as to whether there should be a distribution or not. But yeah, we handle all of the admin side of the banking and transfers when there are exits. And then I guess last question from Chris, what value are you seeing typically with seed investments and what size of raise?
Yeah, so typically we're seeing, so the one we're doing at the moment is about a 2 million valuation, and we're investing around 200,000. That's generally the size. We, anything from sort of 2 to 5 million, and yes, that sort of 10 to 15% raise that they're needing. That's pretty much, yeah, the average. Each one is different, but yeah, that's kind of what we're seeing.
Amazing. Is there anything that we haven't talked about today that you want to cover?
Oh, we've covered a lot, yeah.
Yeah.
I think I'd just like to make the point that if anybody has questions that we haven't answered, feel free to reach out to us. We're on social media, we're on the VentureX platform, we've got the syndicate link up here. Otherwise, drop a note to manager@venturexhq.com.au and we'll gladly respond to you and help you in any way we can.
Yeah, absolutely. And appreciate you listening today. We're excited to be getting this moving and really excited to be sharing some deals with you very soon.
Amazing. Thank you so much both for your time today. It was great chatting with you. Sheryl, I hope we get to meet in person sometime, Sheryls unite.
Sheryl and Sheryl.
Yeah. Thanks everyone for your time today. The link is there and we'll send it out as well.
Terrific.
Thanks,
Have
appreciate
a good
it.
weekend. Take care.
Bye everyone.
Bye.
Bye-bye.